Here's the truth about mortgage rates around the Fed meetings. They don't just move on the day of the cut. They often move before because markets are anticipating that decision. So that's exactly what we saw just happen. Rates drifted lower into the Fed cut and then moved higher afterward, mainly on jobs and inflation reports. So if you read last month's newsletter, we flagged that this could happen. The date of the cut mattered because markets tend to adjust ahead of that time. The jobs and inflation numbers that came out right before and especially right after impacted short-term movements. These are super hard to predict, honestly. So why do jobs and inflation drive follow through? Stronger jobs equals more hiring, faster wage growth, and more inflation worry. So rates tend to go up. If there's softer jobs, so slower hiring, higher unemployment, that means less inflation worry and rates tend to go down. Inflation reports like CPI and PCE cause sticky inflation and that pushes rates to go up. Cooling inflation helps rates move down. So you also hear about this 10-year treasury. Think of it as a yardstick that many lenders use to price mortgages. So when investors expect hotter economy and more inflation, that yardstick's yield goes up and mortgage rates usually go up too. If they expect cooling inflation and slower growth, yields go down and mortgage rates usually go down with it. So from here, in the short term, expect normal ups and downs around each jobs or inflation release. Watch for rates to get better or worse on this day. Do the economic report. In the bigger picture, as long as inflation keeps cooling and growth moderates, the path is for rates to trend lower over time in small steps. Think about a bit of a drop, a bounce, bit of a drop, not one giant drop. For homeowners eyeing a refinance, I'll keep an eye on all you guys. Don't worry about that. I have you on rate watch, so I'll proactively send you quotes when I believe it's advantageous for you. Yes, I'm a lender and I earn income from originating loans, but my commitment is your financial success. I approach this with fiduciary mindset and will only recommend moving forward when it clearly makes sense for you.